Hey everybody, make sure you're subscribed. Welcome to the stream. Let's jump in and talk about how we can make some money today. So welcome back, my beautiful monster drinkers, and welcome to the Morning Monster Show, the only show on the internet that I know of that helps you navigate the absolute circus of global markets, all before, well, my first can of liquid gold kicks in full. Now, let's talk about feelings, specifically that warm, fuzzy feeling you get when the government decides to kind of just stop doing something. You know that feeling like when the HOA finally gives up on telling you that your lawn is half an inch too tall? I mean, it's kind of a beautiful thing, right? When you just get left alone, little slice of freedom. Well, turns out that feeling is about to be supercharged for a very, very particular industry. An industry that's been a bit of a roller coaster in the last few decades, and now staring at what I can only describe as a potential deregulatory bonanza. I'm talking about, of course, the good old US of A's firearm industry. Now, for those of you who've been in this market game for a while, you might be thinking, oh, wait a minute. Plug in the White House, isn't this when everybody stops panic buying their guns because they're not afraid of them being taken away? A so-called Trump slump from the first go-around? And you would be right. It's one of the market's beautiful little ironies here in 2026. See, 2026, my friends, is shaping up to be a whole different beast. This isn't about fear. This is about opportunity. The kind of opportunity that comes when the government doesn't just get out of the way, but actively clears the road for something to happen. Gets all the junk out of the way. See, the Trump administration isn't just talking about protecting the Second Amendment. They're actually talking about a rolling back of years of regulations that have been piled on top of this industry. We're talking about making it easier to sell guns privately, shipping them across state lines in the mail, even boosting exports. It's like the firearms industry just got a golden ticket to Willy Wonka's factory, and the Oompa Loompas are carrying AR-15s. But here's the real kicker. The story isn't going to make you sit up and pay attention. If this story doesn't, I don't know what's going to. See, as of January 1st, 2026, the government has eliminated the $200 tax stamp on suppressors. This is interesting. You can actually, I saw last weekend, I saw somebody registered a potato as a suppressor because it has a $0 tax stamp on it. It's just the craziest freaking thing. For those of you who aren't familiar, a suppressor is a thing that you see in the movies that makes the gun go choo choo instead of bang. It's been a $200 tax and a mountain of paperwork, and that has been a huge barrier for pretty much everybody to get one, except those very dedicated enthusiasts, let's call them. But now, that tax is gone. Poof, finished. Finito, benito, at least for now. So what does that mean for the market? It means a brand new product category just opened up. It's like if the government suddenly made it legal to own a pet tiger, and all you had to do was go to this pet store and buy one. I mean, demand potentially explosive here. And the pun is absolutely intended there. So how do we savvy traders and investors play this kind of thing? Well, let's talk about the players in this little drama, at least ones we can potentially take advantage of. First up, you've got the big boys in the game. The manufacturers, you've got Strum Ruger and Company, ticker RGR. They're the steady, they're old reliable in this industry. Their stock up 15%. The sentiment bullish. You've got the iconic Smith & Wesson. I actually have a stake in that one. SWBI. They're the ones making the guns that are in this sweet spot. See, they're in a $400 to $600 range that a lot of first-time buyers jump into and a lot of seasoned collectors snap up. And here's where it gets interesting. American Outdoor Brands, ticker AOUT, AOUT. These guys are actually on a tear, already up 23% this year. That's kind of a momentum play if you want to get in on it. They've already been sprinting out of the gates. And don't forget ammo, because what fun is a firearm if you don't got something to pew-pew with? Because that's kind of how it all works, right? And that's where a company like Outdoor Holding comes in, and their ticker is POWW. Pow. And they own gunbrokers.com. This is kind of like the eBay of firearms. Their ammunition business, booming. Ammunition is the gift that keeps on giving for investors, though, because once you shoot it, you don't get it back. You got to buy more. I mean, it's a reoccurring revenue stream for gun owners right there, funded by gun owners. You can only shoot that bullet once, unless once per load anyway. And if you're a reloader, but you got to still buy the bullets themselves. The bullet only goes one time. Then, the casing. I don't know. I digress. It gets messy, but most people just buy boxes, buy cases, and shoot once. It's done. You gotta get in another one. Now, you might be thinking, this all sounds great, but what about risk in this sector? And sure, there's risks. I mean, the market's all cyclical. There's a different political wind that could blow as soon as Trump administration is done. But right now, tailwinds is strong. They're actively removing regulation. And this industry is worth $90 billion. And has actually grown 400% since 2008. This isn't just a niche market. I mean, this is a behemoth if you take advantage. The best part, a lot of these stocks still qualifies small caps, micro caps. They've got room to run. This isn't trying to squeeze a few more percentage points out of Apple or Microsoft or Google or Nvidia. This is the Wild West of the market, so to speak. And there's gold in the number hills if you choose properly. So as you sip your coffee this morning, or maybe your Monster, if you're one of the cool kids, think about it. This is an opportunity that's kind of gone under the radar, even though there's billions of dollars at stake. The government is kind of stepping back regulations, the whole new market opening up. They're trying to make it so that these long-standing manufacturers can keep going. The 2026 gunfire gauntlet potentially about to begin, and for those of us paying attention, could be profitable. So stay savvy out there. We'll talk about some charts, look for some other opportunities, and keep on going. Keep on going. Yeah, Potato Suppressor does sound like a fun video game mod, Kimberly. My favorite subscriber in the whole world, right there in the chat, bringing some comedy to it. And right here, all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation, as we talk about trades, is intended to be informational, educational, fun, entertaining. Hopefully you're entertained. It's not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade them, you might lose money. Be careful out there. If you want somebody to tell you what to do, you can visit my new downstairs neighbor, financial advisor, and get some trading help there. Wouldn't it be fun to have a trading competition with a financial advisor and like some of our group? That'd be hilarious. Anyway, maybe we set something up. I don't know. They probably would be so apprehensive to anything like that. I bet they wouldn't do it. Anyway, welcome to the show, everybody. Looks like we got Lieutenant Colonel in the house. Goose. We've got Sledge in the house. Andrew, Arturo, Don, Sergio, Larry, David, Dan, Tam, Mark, Svenborn, Pauline, Steve, Will, Bob, Rob, Mad, Gayton, Mary, Darren, Jody. Good to see everybody. Scott, Debbie. I liked it a lot better when they had the names. Now it's like difficult with the @ symbols. Wrongimer, Skaggs. Welcome everybody. Jesse, Ralph, and welcome to the show. Thanks for coming back. Thanks for being subscribers. Thanks for supporting me and my family. This endeavor. Make sure you like and subscribe. Share with a friend if you know somebody that likes this, might like this kind of content, might learn a thing or two. Jumping in, looking at the calendar here. We're at the end of the week. PCE was kind of a nothing burger yesterday. We've got a little bit of flash manufacturing and services PMI coming up here in 20 minutes or so. And everything's just been kind of quiet on the front here. You know, Trump trying to acquire Greenland for whatever reason he flavor of the day. I still think it's about building his golden dome. I think that's really what it's all about. I think, you know, possibly Venezuela was part of the Golden Dome thing too. He was talking about how he's going to build this Golden Dome. It's going to be better than the Iron Dome that Israel has. And I suspect that some of these weird actions are part of that strategy to build this. Might be wrong, but I think that's really what's at play here. And coming into next week, we have FOMC on Wednesday. First one of the year. Unlikely to cut any kind of rates. See what happens, I guess. Market's just expecting to hold, which, look at the DGS2. That's the treasury rates. We're at the same... We're already there. Like, they cut down into this area. DGS2 is raising into this area. If other governments dump our treasuries, that causes secondary market to be lower and be flooded and very liquid, which causes low demand for new treasuries, which means that the rates would go higher. So if Japan has to do, you know, this earlier in the week, I was talking about Japan kind of melting down. If they have to jump U.S. treasuries to fix their problem, this is what it causes. Higher prices, because flooding the market with treasuries creates lower demand for the new treasuries, which means they have to raise the interest rate to get people to buy them. Well, higher rates on DGS2 means higher rates on the Fed funds rate. These things chase each other. Well, the Fed funds rate chases the DGS2. You can see it for years. This is how this game is played. If you thought the Fed always sets the rate, the Fed is always chasing the Treasury rate. They chase it up, they chase it down, they chase it all over the place. It's kind of interesting. So if the Treasury rate were to go higher because Europe dumps $3 trillion worth of treasuries, or Japan dumps however many $1 trillion worth of treasuries, or both of them dumped however many $1 trillion worth of treasuries, Treasury rate goes higher, could be big trouble in little USA. So we'll see what happens. Looks like the market's open. Jumping in. Trying to break down what we got cooking today here. ES overnight. Finding support on the roadmap line for the 30 minutes. I thought we might retrace and retest that yesterday, if you remember. Now, the interesting thing, we kind of did a 3 up into resistance, and now we've done kind of a 3 down into this support right here. And that creates an interesting situation, I guess you might say. Interesting situation. Can it find support here, or do we break on down and go lower? It's unclear, is what this is. This is messy. So we stopped right at, we made this high back here. That was back. I appreciate the alerts popping up. That's kind of annoying right there behind me. Made this high back here on the 13th. Made this low right here on the 21st, about a week later. Popped up. Hit the 618 right here. And then we've turned down. And we holding right, just right below the 618. Now, if we can hold support in here, kind of in this area, break back above this high, probably going up here. New all-time high on S&P 500. This is the futures for S&P if you are not familiar. If we break down below this zone here, probably going on a deeper correction for now. And it could last into next month. Could take us down to the daily roadmap line, which would be down around 6,600 right now. Could even dip into 6,500 and bounce. So that's the kind of situation we have cooking right now. Is that this is holding resistance right there. And if we, next week with Monday, Tuesday, Wednesday right in front of the FOMC, notoriously, historically, we kind of churn waiting for what the Fed has to say. It's just kind of like the market holds its breath right in front of an FOMC rate change announcement, even if we already know what they're going to say, which is probably no cut. So we may churn right there, and then the market gets disappointed for whatever reason. And the excuse could be there's no rate cut, or the excuse could be there is a cut, or the excuse could be who knows what. The excuse could be that the Trump tariff decision finally comes down from the Supreme Court after being punted 3 times. And Trump last night out there saying he was going to, since the Supreme Court hadn't ruled on anything, he's going to institute $2,000 rebates for everybody and pass out the money. And he doesn't think he needs Congress to be able to do that. He can just do it. Should be interesting. Should be interesting. NASDAQ, same kind of price pattern. It's got me on edge a little bit because this is a downside setup. And we've got it in the 2 big indexes set for a bigger drop here. Got it cooking here on the chart. And that one supports going right to the daily roadmap line, right around 24,000. Russell has outperformed every other index this year so far, right up to the target there at 2740. I mean, beautiful stuff here. Now, it's due for a pause or retrace, as I mentioned yesterday. After hitting that fib line, a pause or possibly a retrace is in order before we go rocking and rolling on up. Now, there is a chance that we just go rocking and rolling on up. The next upside target for that right there. Now, if you're not familiar with Russell, RUT is the main index. IWM is the ETF for this thing. And UWM is a way to play with leverage without buying options. It's already rock and rolling, already at this 1618. Can it go higher? Absolutely. Can it retrace back to the roadmap line? Absolutely. So it's been on an absolute tear this year so far. Absolute tear. Now look at the bigger picture pattern for UWM. Still got some upside potential. 63, possibly even 82 if things get particularly spicy here. If we go on up higher to that 1618 on Russell, see what that would be percent-wise. Talking about another 13% higher. Multiply that by 2 on this chart. 26% higher. Put us right up in the 70 area, potentially. Oil still, man, this is interesting. Why it's particularly interesting. We were in a downtrend with lower highs, lower highs, lower highs. We broke above, came back, didn't actually make it down to back test it, really. Holding in here, but we're underneath this support. I mean, underneath this support resistance line. It's resistance since we're below it. And we're just churning in here. And also, when you run that across there, this could be a bullish potential setup here with the 1, 2, 3, 4. We could have a 5 that pops up here. Maybe touches that long-term downtrend of highs. Retraces one more time back to the roadmap line. And then breaks out. And this be a 1, 2. And set us up for a rally up to the 100 area. Now, that would put the hurting on a lot of stuff because the biggest component of inflation is our good friend oil here. If you've never seen the oil futures, that's what this is. Light crude oil futures. And things could get really spicy if we actually break out on this chart. Gasoline stockpiles are at the highest levels we've had in years. From when I read on the reports, still somewhat bearish. We haven't actually hit the roadmap line. Could push us lower. And then diesel fuel has broken above the roadmap line. This one's been it's been flattening out a little bit here. Didn't do the immediate bullish breakouts. We went into more of a consolidation. We've pulled back, got a little deep on that pullback. This still sets us up if we're going to break out above this high right here. This is a big 3-wave correction, holding in the bottom of support. If we actually break out on this baby, right up here, 338 for diesel fuel. That could get interesting pretty quickly. Way to play some of these, crack. If you want to get a piece of upside potential breakout here, crack is a way to do it. Fennec oil refiners. And if you want to see the individual components of this, more about this fund, there you go. It's made up of some stuff you can trade, some stuff you can't actually get a piece of. There you go. Pretty interesting. Interesting way to play. And speaking of interesting things, SK Hynix. So everybody knows about MU, right? Ripping higher, breaking out, going all-time highs, but they're stepping out of the consumer market. So that basically is like SK Hynix, which is a South Korea memory producer. in the catbird seat, but you can't really take advantage of that in the U.S. markets. But this 3x leverage on South Korea might go on a tear. I know that was like a big diversion, but this is jumping on EWY with leverage. Now, if you just wanted to go to EWY and not get the leverage, is a way to take advantage of SK Hynix right there and Samsung, both memory producers. And there's a reason they're at the top too. So it's a way to get exposure to that without having to do anything else crazy. And this thing might have legs to go on higher. So it's a pretty interesting potential play there. Jumping back to gold. Zoom her up, Buttercup. This thing just keeps being a monster. Keeps being a monster. And 5,000. Looks like we're gunning for it. Gunning for it. I'm going to put my alert right up there. I'm just curious if we hit 5,000. And I need to edit that because it jumped up when I clicked. Not 50,000, 5,000. There we go. I just want to know if it hits it. Now, if we tag 5,000, watch out for potential bigger pullback. Silver hitting 100. You know, which one's first? Do we hit 100 on silver first, or do we hit 5,000 on gold first? Oh, did we tag? I thought, did we tag it? No, the high was 99.93. Add an alert. Edit the alert. Put it at 100 even. Let's do a poll. Let's see what y'all think. What comes first? Let's do a poll right there. For those of you left, which comes first, 5,000 gold or 100 silver? It's an anonymous poll. I can't see anybody's vote, so we got 7 cents away from that on silver today. Gold pulling back just a little bit. We got what, $55 to go on gold. Turning green already. Should be interesting. Which alert fires off first? $100 silver or $5,000 gold? Either one can spark a pullback, so be careful. Bitcoin still sucking. I think we're about to take a bigger swing down. So we broke down below the uptrend of lows here. This uptrend of lows. We broke down below it and back tested it. And if we poke below that low, probably going back below this low from Thanksgiving. That's... Dang. I might buy a put spread on IBIT. Nothing crazy, just like a 48. Maybe a 48, 46. Let's see. I know everybody likes to... I don't usually play bearish, but this is a bearish setup right here. How far out should I go? Ooh, I could do maybe a 49. The puts aren't all that spicy. Let's see. You could just play a 49, I guess, but Yeah, this is interesting right here. If you put it 49.46, it's a $3 potential with a $79 cost. Yeah, $300 potential per contract. You can bring it up to 47, bring your cost down to 59, but you limit your upside to $2. So let's just see. If you had a $2 max divided by 0.59, that's a 3.38 to 1 risk reward. If we did it on at 80, $3, that's 375. You know, compare, they're kind of the same. The higher cost in the wider spread, very similar. That's for 28 days out. You know, the way this is going, it might not drop out that fast. And it could be why they're not pricing it. See, the market's only pricing in right now about a $4 move. Well, it's down to 46. Or up to 54. Probably down to 46. That's why 46. It's kind of interesting. So if it actually dropped to 46, you potentially make at least, you could at least 200% your money. You could at least double your money, if not 3x your money. That's an interesting play. Talking about coming in here at 49, buying a long put, and then coming here at 46 and selling a short put. And if this dropped through or even dropped in here, you could potentially cash out right there. Start a new poll. See what you do. Does anybody find that play interesting? Would you be willing to do it? Yes or no? It's like 60-40 on the 100 gold or 100 silver versus 5,000 gold. So I think that's a pretty solid setup. It's mostly off the Bitcoin chart, not off the IBIT chart, because IBIT doesn't trade Saturday, Sunday. So it messes up the chart just a little bit, makes it muddy. Muddies up the chart. But it basically has that same breakdown right there. If you look at it, connecting that low, 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 and the low on that red candle, broke down, back tested, and potentially if we get below this low, it has to get continuation, but 46, even 45 is real potential here. Bitcoin itself potentially going to go down to 75. Let's just do a little number here. If we go to 75, that's 15.5% on the downside. IBIT, what would that look like? 15.5%. Ooh, yikes. I could potentially be down to 42. Maybe I should play wider. So if Bitcoin takes a trip down to 75, of course it could do that while the market's closed and you can't close out, and it'd be, I have a feeling we're going to get a spicy bounce if we get down to 75. You know, this could, over the weekend, the downside of this play here is this could spike down here over the weekend and then be right back up here, and you're like, mother trucker, I couldn't close my spread. And that's the downside of trying to play options for a downside move on something like Bitcoin, where it does some of these moves on the weekend, and by the time the option market opens back up, it's all over except the crying. And so that's the risk here. That's the risk. That's the risk. So, for those of you who don't like the downside play, I'm sorry. It's a bearish setup, and I just thought I should warn you. So, moving on. Ethereum also has a downside setup. You know, you can potentially take advantage of that with, was it ETHA? ETHA. Take advantage of that one right there. I don't know that it has very liquid options, though. I mean, they're okay. I guess okay liquidity-wise. There's some people playing. So you can do a similar thing here, too. These options quite a bit cheaper. You roll in here with like a 21 and something like an 18. Man, I'm not even sure. You may just go straight up plain vanilla put right there. No more cost than it is. Interesting. There you go. That's how to play the downside in crypto right now. If you wanted to. Now, the risk is that we get the big flush out and, you know, Monday morning we're back up, breaking out, but that doesn't look like what's about to happen. This is a warning sign. First move down, retrace, start out red, can lead to a bigger flush out, and that can take these guys down with it, as well as SPX and INDX. If Japanese stock market takes a big dump, risk on assets are probably going to take a big dump with it. Just the way it works. Global liquidity indicator right here. And look at the dollar. Downward pressure here puts upward pressure on commodities. So the more this drops, the more upward pressure these have. It's not about the stock market, it's about commodities right here. And if, you know, back to the DGS2 conversation there, if we're seeing other countries dump our debt, if we're seeing other countries dump our debt, pushes this higher, pushes the dollar lower. And pushes the commodities higher. Apple. Looks like we may embark on that bigger drop here. Down around this 207 area. Maybe 210. You know, it could be as high as 220. You know, this is like a 220. This is down at like 208. This area right here would be my target for Apple if we break down further. Could bounce at 220. More ideally, we get down to like 208. Amazon, so far, getting the secondary bounce. I really like it. Should have picked it up 2 days ago when I was talking about it. Break back above here. You know, 265 was already activated right here. That was the entry. This was a pullback, gave you a lower entry or a place to dollar cost average for the 265 target up here. 75% likely we're going on up there. And actually, if you look at the Amazon statistics, even though it's not a population, since we're under 30, and this needs to be 30 to be a statistical population, so that's under 6 under. This is running 95% though. So how likely is it you flip a coin 23 times and get heads? Not very likely. So this is showing that Amazon tends to do a trend, pullback, and continuation more often than the average, which is 75%. So this one tends to trend higher than the average. And look at this profit factor. Absolute ridiculous, 36 over here. Absolute ridiculous. So like this likely to come on up here. historical average across all tickers, all time frames, 75% likely for this move to happen. Hey, AMZU is a way to play with some leverage without having to buy any options, without running out of time, without having to make a time decision on an option. Just buy a few, buy a share, buy a fractional share. 36 bucks. Get you in the game with potential upside. How much potential upside? Go like this. Here's the price. Here's the 265 target. That's 12%. AMZU, be at 24% upside potential, which would be right there. So move from 36 to 44, 45. Not bad. Upside potential right there. 75% likely, maybe closer to 90% likely to occur. It's a way to make a buck or two. Google just churning in here. Could not stick the landing yesterday. This is a 1 hour bounce. Could not, look at that. Not get a candle close above that 618. So once we do, it triggers the upside target. 75% likely. And you can see this one running 75 trades, 78%, 1.4. So if we get that close above that level right there, 332.50 on a 1 hour, kicks off this target. This one's 78% likely, so it is running better than the average. Profit factor is better than the average. This is a pretty good upside potential right there too on Google. So looking for that one to trigger off. Meta. METU has the bounce in place. This is a measured bounce, not a roadmap bounce. Has a measured bounce in place here. Secondary measured bounce here. Looking for the upside potential in the 1100 to 1300 area. But it could take a while, like a long while. Like maybe next year. I mean, it could get there this year, but probably next year or the year after, maybe. Probably going to have some pullbacks along the way. Could be even out to 28 or 29. Microsoft, the way this broke down, now it could be wrapping up right there. That could be enough downside. But it would look best if it continues on down here. I'm not going to get... I wouldn't get involved in this until it proves that this is a reversal, that this support's going to hold. It could just go ripping off here and not look back, but this is a much higher likelihood downside target right now on Microsoft, now that we've broken down below this kind of wedge thing. Now, if you look at it, potentially that was... the reason we're kind of bouncing here is usually when we do a wedge, watermelon seed squeeze, the mouth of the thing is usually how far we go, at least initially. And that's exactly what we did, bouncing right there. We could come all the way back up and test it and then come down here. But it's unclear what's happening right now. Unclear what's next. Unclear path forward for right now. NVIDIA, as long as we're under 195, downside pressure, but we're also above the roadmap line, so upside pressure. So this is getting squeezed in here, similar to Microsoft. And if we break down, 150. If we break up, 220. Tesla getting a nice fat bounce here. Like it. Breaking back above that high sets us on this path for that bigger pop up here at a 550 area. Riding about 5,000 shares of TSLL myself. Just leverage Tesla. Looking for this thing to rock and roll on up here to like 36. Or if we get extra spicy up here in the 50 area. Netflix sitting at the bottom of the orange box that I said was probably where we were going. And I'm concerned that this breaks down and comes on down to 60 at this point. Because when you zoom out and look at it, that would be retesting the high, the breakout. You know, we made that high back in 21. We had trouble getting through it in 24. Then we lifted off. This is looking like we might have to come back and retest that and prove that that's support before we can go higher again. But if we don't hold that, opens the door for much bigger downside. And I go in the pre-market pull gainers and pull decliners, and then take a look for opportunities that are actually set up today. And we can dive into some of those really quickly. Let me refresh this really quickly. That didn't look like the right list. Yeah, it was not the right list. So poke in here. Korea getting a little pullback. Remember EWI. You know, big upside opportunities. Just, you know, when I'm talking about diesel fuel potential and crack, this also jumped into my mind. That breaking out potential 149. Side potential. Reddit coming down for a secondary bounce. This kicked off the entry for a 300 upside. Coming back for the secondary bounce. If we can hold on to it. Up there's the target. If we break down, that's support. And if we get below that, bigger retrace in order. Let's check out some setups. What time is it? Yeah, it's after 10. This one's rock and rolling. Here's the high. Here's the low. Turn on the algorithm. There's the entry. Target 650. Low price stuff. Be careful. BLFS. Here's the high. Here's the low. Look for this to break above here for 30.50. Now the daily charts bounce here that actually did kick off. There's the entry 27.28, and that's just more chop though. So I'm not sure I like that at all. CAS. Here's the high. Here's the low. And that one's almost to the target at 46. Didn't, you know, that one, you had to be on that this morning because it's, you know, open and rip. It's going to hit that target pretty quickly. Not always the case, but City Holding Company. There's the high. Here's the low. Entry 129 target. 38.71, 1.2. Not bad. Oh, this is almost beautiful right here. Look how clean that is. 25 target. Nice, clean. Stop is always dollar below the low. The only problem here, I don't like the negative profit factor. It's also no trend here either. But don't like that negative profit factor. Another nice clean one. 67.60 target. GME on the list. This thing might fail, but here's the high. Here's the low. Entry there, 24.60 target right there. INDI. Here's the high. Here's the low. Entry 498. Now, low price stuff, when I say caution low price stuff, anything under 20, especially under 10, a couple things going on here. First off, under 20, most big money doesn't play under 20. Most hedge funds, most, you know, family offices and stuff like that don't buy stuff under 20 bucks. Just mostly. There's a few exceptions, but mostly it's the rule. Under 10, this is where it gets really sketchy. Now, it doesn't always follow patterns, and if you consider something at 10 bucks, a dollar stop is 10%. So the stop's always a dollar below the low. If you get down to like $5, a dollar stop is 20%. If you're down to $4, a dollar stop is 25%. $2, a dollar stop is 50%. Yikes. So the lower the price, be careful. This right here, $3.50, dollar stop, $2.50. That's a big stop right there. Upside potential, $5. So I don't usually play these down in the single digit prices. It just not worth it to me. So be careful. Be careful, be careful. This one, here's the high, here's the low. It did stop out on that drop and kicking it off again. 175.43 target, 45 trades, 64 negative profit factor. Probably just skip that one. PFE, Pfizer. Can this break out of the downtrend? There's the entry, 26.90 target, 52 trades, 82, and a slightly negative profit factor. The losses on this one have eaten up the gains and pushed it into negative territory. But 82% of the time, it does work out. 52 is a statistical population. That's good. That's good. This is kind of bad. So this tells me if you were wanting to play this, play with a smaller risk. Did gap down here after triggering the entry. That's the upside potential. Almost 83% of the time it works out on Pfizer. Worked out last time. SPS. Oh, another really nice looking one right here. This did a split right here. But we have the high right there, the low right there. Entry, 27 target. Stop, dollar below the low, down at 21. 20 trades, 90. Yeah. These numbers are, even though that's only 20, these are looking pretty good. I like the trend that's going here. 10 more trades to get a statistical population, but that one looks likely to. It just has a nice trend pullback continuation pattern going here. So SBS and Venom. Viper Energy. Here's the high, here's the low. This is a reversal play. Tag the target almost exactly. Look at that 42.55, and it could be a great entry point for higher prices here on Venom. Look for this to reverse, get back above the bigger 618 up here. Is that resistance up there at 47? If we get above that, looks like 61 up here for the upside. Now, jumping in, look at the bias for the day. Let's read the tea leaves in the gamma exposure market and see what we got. Yeah. And be careful. Be careful gambling in penny stocks. That's make big money, but you can lose big money all the same. Don't usually lose 100%, but you could make 1,000%. I mean, I'm with you on that, but just be careful. So the range we had yesterday, so we pretty much held on to it. Let's check out the GEX levels here today. See what we got cooking. Looks like we got potential up to 629 and down to about 618. That's the range here that we've got cooking so far today. Usually these levels don't firm up till about 10:30, but 629. Got a little more upside cooking. Down to 618, which is right there. And pull this out to the end of the day. And pull this over. Save. So that's the range we're looking at. We're kind of at the bottom of the range potential. So this may have upside here. We're talking about the breaking through that 618 zone on the retrace for NASDAQ. QQQ is trying to do it. And if it does, this pushes it up to back to this high range where we found a lot of resistance the last couple of weeks. We've touched in that zone quite a few times. And wouldn't surprise me to do it again. Now, doesn't have to hold 618. We could get lower than that, but right now it's not looking like the downside is opened up for a bigger retrace. There is a level all the way down to 610, but it just doesn't look like it's going to play out today. It's kind of evaporating off. Now, another way to look at it is with the levels. Since this is an OPEX Friday, weekly OPEX, where can they screw the most number of people? Sitting right here, about 622. Screw the call holders, screw the put holders, pin it out at 622. And that's right where we're hanging right now. So it could just hang here all day, not do much. I don't know if that's the way it'll work, but that's what it looks like right now. And looking at spiders, it's interesting. 690 would be a good place to park it because then you screw the puts and screw the calls. Big low, big level both sides, right? That 690. Look at the heat map. Yeah, 690, 691. Could be all the way up to 696. And we've got big levels down to 684. So let's check that out on the SPY chart here. Let's grab that, move it over. So what did I say, 696, same place we've had. And I said 684. Well, look at it. We actually have a big level down to 682. So that one's still kind of the same. And we're right in the middle. So it'd be interesting to see some divergence between these two. And this one looking a little more bearish here than Q's. And we're sitting right on that 618. Well, this one could open up the door to the downside here. Even though we have the big level up here, the bubble's kind of sitting above us. We could open the door and take a trip down in here. I got 300 million level at 680. We could get down in there. A little bit of divergence between QQQ and SPY. That's just reading the tea leaves of the gamma exposure. So watch out for a potential drop in here today. Could take place, and we could see some volatility with those big levels in there. QQQ looking a little more muted, and maybe this just drops on out. Could see some downside. The pattern we have cooking here on Qs would support coming on down here. Just maybe take next, maybe drift in here until this OPEX gets through, and then we break on down next week. I don't know. Don't know for sure. Just kind of combining the different ways to look at it. Yeah, pond water trade. So there you go. Have a great day, everybody. We'll see you later. I'll be on Market Masters at 11:30, about an hour from now. I'll be on Monday, same bat time, same bat channel, looking for opportunity, trying to make some money in the market. Have a great day.